Hello, everyone. This is Skander Schweich. I'm a real estate strategist, founder of Square 2 Real Estate, and a real estate investor myself with 14 years of experience across 4 continents. And I have been very reluctant to make this video. Not because there's nothing to say, but because I do not believe it makes sense to react emotionally to headlines, the noise and speculation. And I think it makes much more sense to react to data, to market behavior, and what actually is happening on the ground. And right now, it is still early. It is still too early for anyone to claim with certainty that they already know exactly what is going to happen and how the situation is going to play out. That would not be serious and it would not be responsible. But because of a very high number of calls and messages we have been receiving, I feel it was important to make this video and clarify a few key points in a calm, structured, and logical way. So before I even go into the market itself, I want to start by saying something very important. First of all, I would like to sincerely thank all of our clients and investors who have reached out to check on us and our family. Over the last few days, many of you contacted us not to ask about your investments first, but simply to ask whether we were okay, whether our families were safe, and whether we needed anything. Some of you even offered us apartments or villas in case we needed a place to stay with our families. That level of consideration means a lot. It says a lot about the kind of relationship we have built over the years. And it says a lot about the trust and respect that exists between us and the people we work with. So for that, I want to say thank you. We truly, truly appreciate it. Now, the second thing I want to mention is, in my opinion, extremely important because it tells us a lot about the real sentiment in the market right now. Yes, we are receiving a lot of calls. But many of those calls are not from people looking to panic sell. They're not from people trying to urgently exit the market. In fact, many of the calls we're receiving, especially from new clients, are from people looking to buy. They're asking us about opportunities right now. They're asking about distressed deals. And that is a very important distinction. Because what that tells us is that despite all of the noise, despite all of the emotion online, and despite all of the fear-based commentary, there is still a very strong level of confidence in the market. People are not only thinking about a risk. Smart investors are also thinking about opportunity. And historically, this is exactly what tends to happen in strong markets during periods of uncertainty. Whether it is in 2008, whether it is in 2014-15, whether it is during COVID, or whether it is in a period where markets are under stress, there are often the moments where the best opportunities appear for the investors who remain disciplined and know how to read a market correctly. That applies in real estate. It applies in stocks. It applies in crypto. It applies in any asset class where there is still a deep trust in the long-term fundamentals. So the fact that many of the calls are coming from buyers looking for opportunity and not from owners desperately trying to sell is actually a very reassuring sign. To me, that says that the underlying market sentiment remains much stronger than many people think. Now, before we talk about off-plan pricing, distressed deals, and how developers may react, I want to clarify something else. I think too many people today have suddenly become political commentators overnight. This is not my role. I'm not here to act like a geopolitical analyst. What I'm here to do is give you a practical reading of what this means for investors and for the Dubai real estate market. And the first thing I want to make very clear is this. As of today, the UAE is not in a real estate shutdown. Dubai remains operational. The market remains operational, and there is no current practical basis to behave as though contracts have suddenly stopped mattering. As of now, UAE official messaging continues to emphasize defense, de-escalation, and the protection of residents and infrastructure, while Dubai Land Department services tied to project registration and escrow-linked off-plan activity remains active. So when people speak as though all contracts are automatically suspended, as though buyers, sellers, and tenant can just walk away from obligations because of fear, that is simply not the practical reality we are operating in today. This is a very important point because there is a difference between regional tension and a complete legal and market breakdown. Those are not the same things. And right now, from a practical real estate perspective, this market is still functioning. The UAE's priority has always been stability, continuity, diplomacy, and the protection of its residents, tourism, economy, and infrastructure. That is exactly why I think it is so important not to confuse headlines with automatic assumptions about a collapse in Dubai's property market. Now, with that said, let's move on to the main question everyone wants answered. How is the market reacting so far? And the first point I want to address is the idea of the off-plan prices are going to go down. I simply do not agree with that, and I want to explain why very clearly. The logic of Offplan in Dubai is simple. You are paying over time through a payment plan, and the objective is to benefit from the capital appreciation by the time of handover, or sometimes even before handover. This is one of the core reasons why Offplan has been so attractive in Dubai. Now, because that is the model, developers cannot just start reducing prices on future launches without damaging the very logic that supports investors' confidence. If a developer launches a project at 2,600 dirhams per square foot and then launches in the next building right next door at 2,400 dirhams per square foot, they're immediately penalizing the investor who trusted them first. That early investor bought into the project, trusted the developer, committed capital, and believed in the pricing. If the same developer then offers a better deal next door, that is not just a pricing issue, that is a trust issue. And in Dubai, trust between developers and repeat investor is one of the pillars of the off-plan market. So no, I do not believe serious developers will start cutting launch prices in that way. If demand softens, I believe they will adapt in a smarter way. They may reduce the number of launches. They may release less inventory. They may space out their pipeline more carefully. And they may make payment plans more attractive. Instead of 75-25 or 80-20, we may start seeing more flexibility, such as 50-50 structures, softer milestone plans, and in some cases, even post-handover options. This is a much more logical way to stimulate demand without damaging pricing and their integrity. But there is another major reason why I do not see off-plan prices going down, and this point is extremely important. If disruptions around the Strait of Hormuz continues, freight costs, insurance costs, transport costs, and logistic costs can rise significantly. Reuters reporting last week pointed to a sharp surge in maritime war risk insurance, premiums linked to conflict, and Hormuz shipping risk. Why does that matter? Because construction cost is directly or indirectly linked to logistics. If material becomes more expensive to move, if shipping becomes more expensive to insure, if fuel costs rise, and if supply chain becomes more complicated, then the cost to build can also rise. And if the cost to build rises, then future launch prices does not become cheaper. If anything, it becomes firmer. So when people say off-plan prices are going to fall, I think they're missing two major realities. Number one, serious developers do not want to destroy investors' trust by undercutting their own previous launches. And number two, the replacement cost of building may itself be increasing. So my view is not simply that off-plan prices are unlikely to go down. My view is that depending on how long these disruptions last, future launch pricing in some segments could actually remain firm or even move upward. Now, let's move to the next point because this is where things may become more interesting. That is the secondary off-plan resale market. If the market slows, yes, we may see more distressed deals appear. But I want to be very clear. Distressed deals do not automatically mean the market is collapsing. Very often, distressed deals happen because buyers were not advised properly from the beginning. A lot of people enter deals being told that they will definitely resell in 4, 6, or 8 months. Sometimes that works, but when it doesn't, and the buyer is not prepared to continue paying the developer, then they can be forced sellers. This is where distressed deals come from, not necessarily from a broken market, very often from weak planning and weak advisory. So yes, we may see some opportunities appear in the secondary off-plan market, but that is not the same thing as saying the market is broadly collapsing. That is a completely different conversation. Now, when it comes to ready properties, I also want to make something very clear. As of today, I do not see practical basis to speak as though the market is in legal suspension. Most ready properties remain tied to normal obligations. Mortgages still exist. Tenancy contracts still exist. Transfer obligations still exist. And unless there is a very specific legal development, people should not assume that these obligations simply disappear. Another very important point is the misinformation about so-called market drops. So some people are referring to declines in real estate related indexes or listed companies as that automatically means that Dubai's property prices themselves are falling in the same way. That is very misleading. A real estate related stock index is not the same thing as the direct prices of physical real estate. Those are two completely different things. And on the other side, some people are also using visible transactions data and acting as though they know exactly what is happening in real time this very week. That is also too simplistic. Registration can lag. Off-plan reporting can lag. And what appears today may reflect deals from an earlier moment. So anyone acting with complete certainty right now, whether they are being too negative or too positive, is usually oversimplifying a much more nuanced picture. And this is exactly why I did not want to make this video too quickly. Because this is a time to observe data, not just to react to noise. So now let me conclude with this. My overall view remains constructive, not because I think markets are immune to volatility, and not because I think we should ignore risk, but because I believe the UAE has consistently shown stability, discipline, speed of response, and a strong commitment to preserving order and confidence. That matters. And what is also interesting is that so many people online are actively defending the UAE and speaking positively about how it handles difficult situations. Some people actually find that hard to understand. They're so used to criticizing governments that when they see genuine confidence, they assume it must be fake. But sometimes the explanation is much simpler. When something works, people support it. That is not propaganda. That is trust. So if I had to summarize my current view very clearly, it would be this. I do not currently see serious developers reducing offline prices. If demand softens, I believe developers are more likely to reduce launch volume and adjust payment plans. If logistics disruption continues, construction costs may rise, which can support firmer future launch pricing. Yes, distressed deals may appear in the secondary off-plan market, but that is not the same thing as a broad collapse. The market remains functional. Contracts still matter. And it is still too early for anyone serious to pretend they already know exactly how this entire situation will pay out. This is a time for structure. This is a time for discipline. And this is a time for intelligent analysis. If you found this video useful, leave your questions in the comments below or send us a message directly on WhatsApp's number, which is above. We will continue to monitor the market closely, and we will continue to provide calm, structured, and strategic updates. Thank you very much for your time. I'll speak to you again very soon.